Good morning, this is Bloomberg Daybreak Europe. I'm Tom Mackenzie in London. These are the stories that set your agenda. Manic Monday, global stocks plunge and bonds rally over concerns the Fed is behind the curve. Japan's Topix crashes more than 9%. Goldman Sachs raises the odds of a US recession to 25%. Warren Buffett grows his cash pile. Berkshire Hathaway slashes its stake in Apple by almost 50% as part of a second quarter selling spree. And unrest in the UK. Prime Minister Keir Starmer calls an emergency security meeting after a weekend of widespread disorder and far-right riots. Welcome back and happy Monday. Brace yourselves then for a challenging day across these markets. European futures, of course, pointing lower by 1.3% right now after the losses of more than 3% across the European space last week in terms of stocks. And of course, the downside stateside, the Nasdaq 100 now in correction territory. A weaker jobs report, unemployment moving from 4.1% in the US to 4.3%, and the repricing across the curve. Aggressive moves, of course, into US Treasuries, particularly at the front end. Just last week, the US 2-year, the yield moving by 50 basis points lower as markets reprice in additional cuts this year from the Federal Reserve. FTSE 100 futures pointing lower by 60 points as we lead up to the open. 8 a.m. UK time, currently lower by 0.7%. S&P futures stateside looking to further losses of almost 2%. And the Nasdaq 100, look at that, pointing lower by close to 4%, 3.7% already, again, in contraction territory. Let's flip the board and look cross-asset then, because the moves in the Japanese yen, my goodness, have they been pronounced. The strength coming through for this currency, and you're seeing an unwind of the carry trade. You look at the Mexican peso, the last time I checked, down around 4%. The Japanese yen at 143. We've gone from 161 to 143 in the space of about 30 days. Gains of 2.2% for the Japanese currency today. 3.8 on the 2-year. 3.8 on the 2-year after a 50 basis point move lower in yields last week. In terms of Bitcoin, also getting crushed, along with Ether, currently down almost 10% at 53,264. Don't forget, we were close to 74,000 at the record high in terms of Bitcoin earlier this year. Brent, $76 a barrel, currently down close to 0.2%. We look at the geopolitical risk, of course, in terms of the Middle East. Let's get the latest right now in terms of the sell-off in Asia, where the pain in Japan has been pronounced. To bring in Avril Hong, standing by in Singapore. Avril, what a morning.
Yeah, I almost don't know where to begin, Tom, but let's start with what we're seeing on the Japanese currency. Extreme rally, as you mentioned there, as traders seem to be moving quickly out of these formerly crowded positions, unwinding the carry trade, reacting to the US jobs report and those recalibrated expectations of what the BOJ, what the Fed is going to do. Not just the yen that's rallying today, also the Chinese renminbi. And amid all this, some of the levels that we are potentially watching next could be 126, 127 on dollar yen, because it's broken through the 100-week moving average, which suggests that traders see further appreciation in the Japanese currency. And of course, this is close to erasing already the declines, the yen, for this year. Flip the board. Let's talk about what we're seeing cross assets, the extreme selling and buying that we've been seeing today, depending on which asset you're looking at. The Topix is seeing its worst day since 2011. That is the Fukushima meltdown aftermath. We're also seeing indiscriminate selling hitting the banks, which in theory should benefit from rate hikes, but we're also seeing that rapid coming down of yields, that raising their concerns about what we're going to see for banks' margins. The bank stocks seeing their worst day since the 1980s. We saw a number of these circuit breakers in Japan being triggered. New Nikkei futures, JGB futures, and also interesting to see that flip the board on a day like this, China equity is not faring as badly. So a bit of a safe haven sentiment towards these China equities. But of course, the steep selling also being seen on the TAIEX that is losing the most. We haven't seen declines like this ever. This is the worst decline you're seeing on record. Of course, tech stocks taking a beating on the MSCI Asia Pacific today, and this is not helped along by what we're seeing from Berkshire Hathaway, more than halving or about halving its stake in Apple. So a lot of headwinds in the markets today. Tom.
Records tumbling and Avril Hong with the superlatives across these markets. Avril, thank you very much indeed out of Singapore. Let's stay with the rout then in global stocks and what's underpinning it. Intensifying, of course, in the session so far, with bond yields tumbling after a weak US jobs report fueled worries that the Fed's decision to hold rates at a 2-decade high is risking a deeper economic slowdown. Let's get more from Bloomberg M-Live strategist Mark Cranfield then. Mark, how much of the sell-off in the session today is about that jobs report, the catch-up in terms of sentiment and the mood? This is pronounced.
It certainly has quite a bit to do with it. It's not the only factor, but obviously what traders are really worried about is we're getting something like the kind of policy mismatch of signals that we saw back in 2022. If you remember then, the Fed allowed inflation to go up fairly quickly before they started to rein it in by hiking interest rates. When they did so, they needed to do it a few times by 75 basis points, the so-called jumbo rate hikes. Now they seem to have delayed lowering interest rates when it looks as though the economy needs it, particularly as the jobs market is cracking a little bit faster than even they seem to have predicted. It's no wonder that traders are already pretty much pricing 50 basis points for September, and they may even go a bit further. We still have 2 inflation reports to come before the Fed meets again. We have 1 more jobs report. If that data continues to question the state of the American economy, then traders will just keep driving for even lower rates. And obviously the fact that equity markets are joining in by having a pretty ugly, not just today, but it was bad last week already, that's fueling the move into bonds, which are the only safe haven really, and this massive reversal that Ava was talking about in the yen as well. You put it all together, and traders feel fairly confident that the Fed will be pushed into a lot more rate cuts than the one they have in the dot plots.
Currently looking at the 2-year mark at 379, so a move lower in terms of basis points, 8 basis points so far in terms of the yield on the front end. It was about a month ago, Mark, that you flagged the risks of a jumbo cut from this Fed. And the kind of reaction was, hang on a second, Mark, you're getting ahead of your skis there. But now everyone's catching up to you. It's pronounced in terms of how the markets are pivoting around expectations of additional and sizable cuts from the Fed. As you look ahead to this week, then, how do you expect the market rotation to play out? I mean, what are the key risks this week? Is this a market that's gone too far, Mark?
It's certainly looking exaggerated, but even so, the mood is so ugly, and nobody's quite sure how big the positioning is. If you think of the move up in tech stocks, for example, in the United States, went on for a long period of time, and you had companies like Nvidia that flew from 1 trillion to 2 trillion to 3 trillion market cap. That sucks in an enormous amount of investor funds, and that is gradually coming out. We don't know how far it's going to go, both in the retail sector and the institutional sector. And people having losses in one part will then look to shed risk in other parts of the market as well to try and make up for it. So even though it looks as though maybe on a long-term basis there's some relative value starting to appear, Japanese equities certainly fall into that category. But will anybody be brave enough to actually put their money to work when it's just selling, and more selling? We desperately need central bankers, particularly from the Fed, to come in and speak to the market and say, don't worry, everything's under control, it's working out according to our plan, nothing has changed. If we don't get them and the European Central Bank speaking to the market, it's just going to get worse, because traders will take it into their own hands. They will think that something is going wrong in the background and they need to reduce their positions immediately.
OK, we listen out for those Fed speakers then in the days ahead as we look at this continued rout and a move, of course, into the bond market. Pronounced, of course, that bond market rally and the equity market rally, market rout, I should say. Bond market rally, equity market rout. Markets live strategist Mark Cranfield on a pretty remarkable move that we're seeing across these markets right now. One of the catalysts, it seems, as well, in terms of the negativity, was what's been happening from Warren Buffett and his decision to sell down heavily his stake in Apple. Berkshire Hathaway then slashing its stake in Apple by almost almost half. It comes as part of a massive second quarter selling spree that boosted Buffett's cash pile to a record $277 billion US dollars. Let's get to the details then and bring in Bloomberg opening trade anchor Kriti Gupta. So, Kriti, why is Warren selling, and why is he selling now?
Well, that's the mystery. He hasn't given an official reason, but there's plenty of speculation that this is, at the end of the day, a story about the consumer. Warren Buffett is known for really having that exposure to companies like railroads, Coca-Cola, Apple, for example, was his big tech bid. But this follows some of the slashing that he's done in other parts of his portfolio as well, including the likes of Bank of America. If you kind of tie the two together, you'll see there is a consumer story baked in. And let me explain how. The Bank of America story, this comes after 2 times where he's kind of brought back his stake. Bank of America is a bank, of course, in the States that has a lot more consumer loan exposure than any other of some of its counterparts, JP Morgan, Morgan Stanley, et cetera. So that's going to be one aspect of it. Apple kind of falls into that same category because even though it is a luxury product, it is still very much a good chunk of its revenue is based on things like foot traffic, for example, in some of its stores. It's based on other very consumer disposable income factors as well that eats into Apple. Now, there are arguments here that Apple's been having a really tough time getting on the AI train, really getting hit by some of those FX exposure as well internationally. So there is speculation that Buffett just saw this was a stock that was largely overvalued given the tech rally that we've seen. But if you sew this in with some of the other kind of plays that he's made, it could be a read on the consumer, which, of course, folds in nicely with the fact that you are seeing a major sell-off, not just around the world in the stock market, but specifically in Japanese banks as well, which is another Warren Buffett bid.
OK. Bloomberg opening trade anchor Kriti Gupta, thank you very much indeed. And what we've been seeing, of course, from Berkshire Hathaway, the sell down of Bank of America last week, and now Apple cutting that stake by around 50%. Pretty significant, it seems, on multiple fronts. Kriti, thank you. Some redheads crossing the terminal right now. This is involving the French bank SocGen, Société Générale, then, selling private banking units in the UK and Switzerland. Here are the details then. They have signed, SocGen has signed agreements with Union Bancaire Privée, UBP, for the sale of 2 of its units, Kleinwort Hambros and SocGen Private Banking Suisse, in the UK and Switzerland. The transactions are going to be implemented at a total price of around 900 million euros, so close to €1 billion in terms of the value of this deal. That's including equity. And in terms of the time frame, they expect these deals to be completed by the end of the first quarter of 2025. So that's the redhead. SocGen selling its private banking units in the UK and Switzerland. Here's what else to be thinking about then for the rest of this week. Today we're going to get US ISM Services Index. That's going to be published stateside, so giving you a clearer picture in terms of the services sector in the US. We know that services costs and inflation has been a key focus for this Federal Reserve. But again, haven't things changed just in the last week or so in terms of expectations? When and to what extent they cut next September, of course, and the expectation from the likes of Citi that they will cut up to 50 basis points in September. Tuesday, Saudi Aramco earnings, so a take there in terms of the oil complex from Saudi Arabia's biggest energy provider, of course, listed energy company, one of the biggest listed companies in the world. On Wednesday, talking of some of the largest listed companies in the world, Novo Nordisk earnings reporting, of course, in terms of Europe, its largest listed company. So really consequential for European equities on the earnings space coming through for the maker of those obesity and weight loss drugs, of course. Switching focus, coming up, Israel bracing for retaliatory attacks after the assassination of Hezbollah and Hamas leaders. We're going to have the latest from the Middle East. That is next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. The losses across Asia continue to extend. Earlier in the session, we had a circuit breaker kicking in for the topics over in Japan. Now the Kospi in South Korea falling more than 8%, triggering a circuit breaker again after it sinks more than 8%. Tech is part of the sell-off story, of course, in South Korea and the concerns there. But again, the readjustment to concerns that maybe the Fed is behind the curve, maybe some of these valuations around tech have been a little too stretched, and the selling of course, pronounced then in South Korea. We've seen a similar picture over in Japan, where the Nikkei is currently down just close to 10%. So a brutal day for Asian equities. Let's get back to geopolitics right now, though, and we'll keep across the market story for you as well, of course. But in terms of the geopolitics, Israel is in focus once again, bracing for attacks in terms of retaliation, potential retaliation for assassinating the Hezbollah and Hamas officials, of course, last week. That's as the US presses for a ceasefire deal. According to Axios, US Secretary of State Antony Blinken told G7 foreign ministers yesterday that an attack by Iran and Hezbollah could begin as early as today. Bloomberg Horizon's Middle East and Africa anchor Jemana Pasechi joins me now. Jemana, walk us through the developments then over the weekend.
Yeah, an attack certainly does appear to be imminent. Axios is reporting that the U.S. Secretary of State Antony Blinken had a call with his G7 counterparts in which he warned that an attack on Israel by Iran and its proxies, including Hezbollah, potentially Houthis as well, could happen in the next 24 to 48 hours. This as he simultaneously emphasized the need for an urgent de-escalation of tensions in the region. Now, concurrently, we know that the head of the U.S. Central Command, that is the General Michael Kurilla, arrived in the Middle East on Saturday. This was part of a planned trip, but he is also expected to try to shore up regional and international support to build together a coalition in support of Israel's air defense system. You may recall that back on April 13th, the CENTCOM, in conjunction with the rest of these members of the coalition, were key to defending Israel's air defense system at the time of that barrage of attacks that came through from Iran. So very interesting that he's there in the region. This as well, alongside multiple embassies in the region, in Lebanon specifically, warning their citizens to get out of the country ASAP, as soon as possible. The likes of US, UK, Australia, Germany, France, Switzerland, even Saudi Arabia calling on their citizens to leave Lebanon in expectation of an imminent escalation of tensions in the region. And it certainly does appear that if it does happen, it will happen sooner rather than later. And so the region is very much on edge.
OK, Bloomberg Horizon's Middle East and Africa anchor Jemana Pasechi on the latest out of the Middle East, of course, as we watch for any potential retaliation from Iran and its proxies. It is a big news day, people, because right now a redhead crossing in a very different space, a very different story, of course. But this is around deal-making. L'Oréal agreeing to buy a 10% stake in Galderma. This is a Swiss company focused on dermatology. A few other details coming through in terms of what this could mean. L'Oréal and Galderma agreeing to work towards a scientific partnership. That coming from Dow Jones. The CEO of L'Oréal saying they fully support Galderma's management and strategy. Again, the top line is that L'Oréal is buying a 10% stake in this Swiss-listed company, Galderma, that is focused on dermatology. Coming up, our exclusive interview with billionaire Gautam Adani. Exclusive as we begin a week of special coverage on his business and succession plans with unprecedented access to the Adani Group and its next generation of leaders. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, today we begin special coverage of one of India's most controversial and largest business groups in our exclusive interview with its billionaire founder, Gautam Adani. He reveals how he's putting in motion one of the world's largest and most challenging succession plans. This comes as the Adani Group continues to face fallout from the short seller report that last year wiped $150 billion from its market value. Adani also dismisses allegations that the conglomerate's dominance in key sectors of India's economy is due to his relationship with the Modi government.
It's been a volatile few years for Gautam Adani. The Indian billionaire has built the Adani Group into a sprawling conglomerate that controls large and critical infrastructure projects in one of the world's fastest-growing economies. While it's made Adani one of the world's richest people, it's also attracted accusations of cronyism over his close ties to Prime Minister Narendra Modi, as well as questions about corporate governance. In January 2023, those concerns erupted onto the global stage when short seller Hindenburg Research accused the Adani Group of fraud and stock price manipulation. Though they denied those allegations, the report still triggered a $150 billion meltdown in shares of the group's listed firms and cast a shadow over the company, just as it was eyeing a wider global play. The stocks have since then pared most losses, and the Adanis have tied up fresh lines of bank and equity financing and won a reprieve from India's Supreme Court. But fears linger as investigations by India's market regulator and the U.S. Department of Justice continue. It's with this backdrop that the 62-year-old founder spoke to Bloomberg's Anto Antony to say he's setting in motion a succession plan that will hand the running of his massive conglomerate in about 8 years to the next generation of his family, which he dubs the G2. Adani limited on-camera questions to succession. We asked him about the impact the short seller report and its aftermath had on this transition plan.
Mr. Adani, you said that the succession plan was conceived about 10 years back. Now the last 2 years incidents, the investigations, Hindenburg report, has it affected it in any way, the implementation?
In hindsight, I can say that it is this incident makes family more together and work very hard to fight it back. And I definitely basically see that they have converted this incident into the great opportunity for family uniteness. Secondly, they work hard, and whatever corrections in each and every aspect of our businesses we have to do. And in fact, basically this Hindenburg issues of this last year was a Adani Group history is the highest performance.
Many people attribute your business growth to how you strategize your company's priorities to that of the government's priorities, whether it is state or center. Is that something that you will ask the next generation to continue?
I strongly believe that when you basically business directions towards government priorities, you always basically get the tailwinds and not the headwinds. And that helps your group to grow faster.
That strategy has meant the Adanis now control big chunks of India's infrastructure, including ports, airports, and data centers. So the decision on how the Adani Group will be managed in the future will have ramifications beyond the conglomerate and the family.
Tell us about your succession plans. What steps are you putting in place to ensure that this goes on smoothly for the investors, the family, as well as the company?
Succession is a very, very important for the business sustainability. And it must be organic, gradual, and a very systematic. Succession is not one of the events, but it is a long-term journey. And my plan of succession started almost a decade ago. And I gradually inducted our G2, Pranav, Karan, Sagar, and now Jeet. And the successions will be completed according to my planning in next 8 to 10 years.
Okay, Adani Group Chairman Gautam Adani speaking exclusively with Bloomberg's Anto Antony. And our special coverage of the Adani Group continues all week. It culminates with a special report on Friday, 4:30 a.m. UK time, with an encore presentation at midday. An encore presentation, interesting, in the UK. That's 4:30 p.m. in Mumbai. Let's just check back in these markets, because I think it's fair to say we are now seeing a meltdown in these markets. The Topix is now down, as you can see, over in Japan. The Nikkei 225 is down around 10%, 11% right now, the Nikkei. You're seeing basically the gains of the year being wiped out across these Asian stocks. The Kospi, you saw a circuit breaker kicking in there. The Kospi over in South Korea down 8%. Nasdaq futures stateside pointing to further losses of 4%. And here in Europe, you're looking at losses of 1.7% after 3% or more losses last week. Coming up, Europe's most valuable company in focus. This is Bloomberg. morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Manic Monday, global stocks plunge. Bonds rally over concerns the Fed is behind the curve. Japan's topics and South Korea's Kospi sink. Goldman Sachs raises the odds of a US recession to 25%. Warren Buffett grows his cash pile. Berkshire Hathaway slashes its stake in Apple by almost 50% as part of a second quarter selling spree. And unrest here in the UK. Prime Minister Keir Starmer calls an emergency security meeting after a weekend of widespread disorder and far-right riots. Let's check in on these markets then. You are seeing meltdown in Asia. The MSCI Asia Pacific has wiped out the gains of the year. The topics over in Japan having been up 24%, now down 2% for the year. The banks getting crushed in Japan and in South Korea. European futures pointing lower by 1.8% after losses of more than 3% for European stocks last week. The Nasdaq, of course, in correction territory, the Nasdaq 100, and the losses again today being flagged, pronounced by these futures. Looking at further losses of close to 4% on the Nasdaq 100. FTSE 100 futures here in the UK pointing lower by a full percentage point. S&P futures at 5,270, looking at losses of close to 2%. Let's flip the board and look cross-asset because the moves into treasuries, the bond market rally continues after the gains that we saw last week. The 2-year saw gains in terms of yields down 50 basis points in a single week for the 2-year at 377, a 10 basis point move lower today. Building on that bond market rally. Expectation that the Fed could go with a jumbo cut. Certainly that is the view of Citi and JP Morgan in September. Markets pricing in more than a full percentage point of cuts from this Federal Reserve by the end of this year. The rally in the yen, 143. Look at that. It wasn't that long ago that we were at 161. We've moved from 161 to 143 in the space of about 30 days. Gains of 2.3% for the Japanese yen right now in the session and unwinding those carry trades. Currencies like the Mexican peso getting crushed. 53,666 on Bitcoin. Also feeling the pressure, down 10% so far after losses of 10% last week for the largest cryptocurrency. $76 a barrel on Brent, currently down 0.5%. We have some breaking lines when it comes to the earnings story. Infineon Technology, of course, the key French-listed chip maker, sees fourth quarter segment result margin. So this is the margin story for the fourth quarter for this semiconductor chip maker, Infineon. The margins coming in at about 20%. That is below the estimates of just shy of 22%. The estimates have been for 21.6%. They now see fourth quarter margins of around 20%. And in terms of the full year revenue, that is also coming in lower than the estimates for Infineon. 15 billion euros versus 15.13 billion. That had been the estimates. In terms of the full-year forecast, well within the previously guided range is the line from Infineon, but we know there has been a challenge, particularly in terms of EV chip demand and smartphone chip demand as well. And we saw that with the likes of Samsung and Qualcomm. Let's cross over now to get a more broad pick or look at, I should say, of the equity market story. US stocks and the index futures are slumping, as we've discussed, deepening last week's losses amid mounting concerns over the economy. Japan's topics then crashing more than 10%, leading widespread losses across Asia. Let's bring in MLive's Paul Dobson for a take on this market reaction. Paul, is this an overreaction to the jobs report that we had on Friday? Yes, we went from 4.1% to 4.3%. Number of jobs added came in well below the estimates. But the work that's been done in these markets is pronounced. Is this an overreaction?
Good morning, Tom. It's certainly a very grim reaction in markets today. And part of that catalyst, I guess, was the payrolls report. There's a lot else going on in the background. But if you think about those jobs numbers, it was a miss. But it was still a positive number. It's not like an immediate signal that we're in contractionary territory, which you might think would be the case, judged by the market reaction. What we do know, though, is that the Fed has been concerned about the labour market, has been paying quite a close attention to it, and that a lot of the literature around it has been pointing to this idea that actually job losses have been more extensive than the data have so far shown. In taking it a step further, you can interpret from some of the data that's out there on the labour market that the US could already be in a recession. And so the fact that we suddenly saw this turning point that everybody had been kind of waiting for maybe has kind of lit the fuse in terms of this market sell-off. And so, yes, the moves that we have today are very extreme, even in US futures and also in Asia's markets, and looking not so good for Europe either, for that matter. That single data point is not enough to get us there. There's a lot else going on in the background, but it is a reason to be more concerned about the outlook for the US economy and therefore the global economy.
So, Paul, the benchmark in your part of the world, the MSCI Asia Pacific, is now down 6%. The Nikkei 225 over in Japan, down 12.2%. The Kospi down more than 8%. Why so much bloodletting in Asia?
Yeah. It really is Asia that has been bearing the brunt. And I guess that's not just because of the US issues. It's also, of course, that tech has been bearing the brunt of the sell-off. And Asia does have a number of tech-heavy gauges, particularly if you look at what's going on in South Korea and Taiwan today. Fairly grim reading as well. And then in the background, we also have the Japan story, which is connected and not connected to the rest of the market. While everybody else around the world has been either cutting interest rates or talking about it, Japan has hiked. And it seems to have hiked at just the wrong moment as far as markets are concerned. It's caused this really big reversal in dollar yen. We have the central banks there moving in those opposite directions, potentially. And that seems to have whipped up volatility in other markets, really caused a big unwind of carry trades, really led to an increase in volatility and caused this unwind of everything else as well, which is turning, it becomes almost self-fulfilling. The more we get those moves, those increases in realized volatility, the less appetite for risk the market has. It needs to retrench, it needs to de-risk. And so that big pullback is what we're seeing here. People selling first, asking questions later. If you look, it's not just equities, credit market spreads are blowing wider, as you pointed out. Crypto as well, having a particularly grim day. So people are selling liquid assets, people are selling assets that have done well this year. And that tells you that, sentiment is really turning very negative, and Asia taking a very big hit as a result of that.
Yeah, to your point, the Amundi call on 140 for the Japanese yen doesn't look too much of an outlier right now. 142.81 on the Japanese currency, currently up 2.6%. Bloomberg M Live's Paul Dobson with some of the factors feeding into these market losses right now. You're not seeing losses, of course, in the Treasury market, where you're seeing significant gains. Yields down 11 basis points on the front end, the 2-year at 3.76. Paul, thank you. Some of the biggest names, though, in terms of the earnings story, healthcare, manufacturing, travel, all reporting this week. Will the earnings story give some sort of respite to these markets? We're expecting results from Airbnb, Allianz, IHG, and Europe's most valuable company, Novo Nordisk. Who better then to walk us through what to expect? Tim Craighead, Director of Research at Bloomberg Intelligence, joins me for the setup. Craig, thank you very much for joining us on set for the setup. It's going to another big week in terms of the earnings story for Europe. Where are you going to be focused? Can we expect some reprieve? What are you going to be looking for?
Well, unfortunately, earnings have not been that supportive as we've seen so far through the earnings reporting period. On the one hand, results so far are showing 50% beat versus 30% miss. And you'd think, OK, that's all right. Earnings growth for the quarter is about 3% versus about 1% going into the quarter. But second half estimates for growth have actually come down a little bit from 7% growth. Now the market's expecting 4 to 5% growth. 2025 estimates have also been negatively revised down. So the second quarter beat isn't following through from the standpoint of expected earnings growth going forward. So I would say, it's not such a great signal so far, along with whatever else is going on in the marketplace. OK,
I'm surprised you're still speaking to me after I butchered your name. The caffeine has not kicked in this Monday morning. Tim, of course, just readjusting your name for you. OK, really interesting in terms of earnings expectations. Novo Nordisk is clearly going to be a big one. The biggest market cap company in Europe. The gains have been just phenomenal for this company. What within Novo are you looking for?
Yeah, it's an interesting thing because not only do you have Novo, as you mentioned in the setup, you've also got Eli Lilly. And these are the two plays for the anti-obesity world, which has been what has driven these two stocks to these magnificent levels. Novo's come back down to life a little bit from the standpoint of high-flying stocks. So the valuation premium has come off a little bit. It'll be really interesting to see what both companies say about this product, because not only is it allowing you to lose weight, but, as you know, there's been indications about what does it mean for your heart. There's been indications about even possibly, Alzheimer's.
Yeah.
No
it's almost on a weekly basis. You
yeah,
get
there's
a line
another
talking
indication.
about an additional benefit that comes through from this.
Notwithstanding the market mess, I think seeing what happens in terms of further discussion about the longer-term potential for this miracle drug, I think is going to be on everybody's mind.
Okay, Tim, thank you very much indeed. Great setup on another big week, of course, in terms of the earnings story. Novo Nordisk will play that role as well. Tim Craighead, Director of Equity Research for Bloomberg Intelligence. Thank you. To politics now. US Vice President Kamala Harris is said to have met with her possible running mates. The talks come as she picks who will join her on the 2024 Democratic presidential ticket. Sources say Harris met with Arizona Senator Mark Kelly, Pennsylvania Governor Josh Shapiro, and Minnesota Governor Tim Walz. The Democratic National Committee plans to nominate a ticket virtually this week. Ukraine's President Volodymyr Zelensky has hailed a new era for the country's military as she showcased a pair of Western warplanes. Two F-16 fighter jets passed overhead while reporters toured an airbase on the outskirts of Kyiv on Sunday. This as Ukraine marked its annual Air Force Day. And here in the UK, Prime Minister Keir Starmer has called an emergency security meeting in a bid to quell far-right riots that have rocked communities across the UK. Violence erupted in towns and cities over the weekend in the first major test for the new Labour government. The disorder fuelled by an online misinformation campaign since an attack a week ago left 3 young girls dead. Let's bring in Bloomberg's EMEA News Director, Ros Mattison. Ros, what has sparked the violence that we've seen in a number of cities then across a number of days here in the UK?
Well, as you were saying, the spark for this one seems to have been that horrible killing about a week ago, the stabbing of young children at a dance party in Southport. And after that, very, very quickly, a bunch of disinformation circulated online, which seemed to be propagated by far-right groups based in the UK or from outside the UK, alleging that the alleged perpetrator was a Muslim and was an asylum seeker, both of which seemed to be inaccurate. But that spread very, very quickly and fanned that idea again that migrants are causing problems in the UK. And of course, that then led to people gathering outside refugee centres, asylum centres, in some cases attempting to set them on fire, trying to storm them and cause violence. And that's just morphed in different parts around the country. It's a bit evocative, well, sort of evocative of the 2011 riots that we saw in the UK, that Keir Starmer, of course, was the chief prosecutor on, so he's got some experience there. But this goes back some way. Brexit was supposed to, in a way, sand down these issues around migration for the UK. But in a way, migration's only become more and more part of the consciousness and the debate, the political debate here, fanned by these right-wing groups, by disinformation, by politicians also from some parties. The idea that migration is a fundamental problem for the UK. So very quickly that snowballed in what we've seen here with more protests or gatherings, we don't call them events, planned by these groups.
OK, yeah, thuggery, as the Prime Minister describes it, and the Home Secretary saying that these rioters will be held to account. But there are a number of factors, of course, feeding in to what's seeing on the streets of some UK cities. Bloomberg's EMEA News Director, Ros Mattison, thank you very much indeed for the latest there. Back to the markets right now, and the superlatives keep coming thick and fast. Taiwan's TAIEX closing down 8.4%. That's the worst day on record. That is the worst day on record. In Japan, you're looking at the Topix now heading for its worst sell-off since 1987. We keep across these markets for you as you see this meltdown right now in Asia. By the way, US futures, Nasdaq futures pointing lower by 4.6%. S&P E-minis down by 2.3%. Coming up, as traders rapidly ramp up bets on rate cuts from the Fed, then we take a look at emerging market credit and how to position there given the volatility that we're seeing. Stay with us. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, traders pricing in Fed cuts of more than 1% this year following Friday's soft jobs report. Markets also watching uncertainty, of course, around the US election. We expect Kamala Harris to make her VP pick in the next couple of days. Of course, that election in November. Let's take a closer look then at what this means for flows into emerging market credit. Who better then to join us on this than Trang Nguyen, Global Head of EM Credit Strategy at BNP Paribas. Trang, let's start with the Fed story then and this rapid repricing, and it's pretty marked as we look again at money moving into treasuries in an aggressive manner in the session today. So pricing in a little over 1% in terms of cuts from the Fed. Then you have the political risk of the US. How do you see that impacting flows into EM credit?
Sure. So I think we've had a lot of conversations about this, given the stiff competition from money markets. So chances are we are getting those rate cuts that we've talked about. That is a condition to reduce this competition. But at the moment, as we wake up today, risk markets are all in the red. So while we might be getting the rate cuts, this changing narrative around why the Fed is cutting really has some major implications. We're moving away from this immaculate disinflation narrative that markets were so thrilled about early in the year into, reassessing a scenario where recession risks are back on the table. So that is risk off. Now, so I think the rate cuts are still required to see the inflows story return to EM, but we also need to see a stabilization in markets as well. And so this is an environment where I think we need to see some decisive policy action to really calm markets before those inflows can return again.
Okay, in terms of that decisive policy action, a lot of the central banks in the EM world were ahead of the curve in terms of getting in place those rate reductions, given the way that inflation has adjusted in that part of the world. Is there much more that central banks in EM can do? Are they running out of dry powder at this point?
So I think we're looking at an environment that is complicated by politics as well as you alluded to earlier. So if markets are now reassessing the potential implications of Trump 2.0, and I think one of the key channels of risk comes from the trade and tariff angle. And that not only has a negative implication on growth, but also, I think, more importantly, on inflation dynamics. And that could complicate central banks' ability to continue delivering cuts. All right, so and beyond that, there are a lot of other issues that markets are assessing when it comes to the future of NATO, what it means for Middle East tensions, what it means for aid for Ukraine, migration issues in Latin America. So a lot of issues that are quite nuanced in terms of implications on specific EM markets. But I think there's also an undercurrent from the sentiment channel that is negative in terms of a potential Trump 2.0 increasing this narrative around fragmentation, deglobalization, and multipolarism as well.
Dollar-denominated debt in EM has outperformed local currency debt. Does that continue?
I think so. So, I've been portraying this or advocating this positive narrative for EM credit for some time, and there is this positive fundamental improvement. Right? We have the restructuring stories that are finally coming to conclusion, whether it be Zambia, Sri Lanka, Ukraine, or Ghana. We have improving rating trends as well. So, again, if you look at the ratio of upgrades to downgrades, it's been the highest it's been in a long time. So that does reflect this improving fundamental trend. And it, in the past 2 weeks, we've also had two countries being upgraded to investment grade, Azerbaijan and Paraguay. I mean, that is a big deal because it bucks a trend that we've seen in the past 10 years, given we have some of the larger EM economies that have lost investment grade, right? So you have Brazil, Russia, South Africa, Turkey. So this trend is taking shape in a kind of gradual manner, but I think it's worth highlighting. So EM credit, I think is still a good trade here, and I still advocate the high yielders. They exhibit high beta to global risk, which means the sell-off environment does introduce some.
Give us some names then. Where are you finding alpha right now?
So again, on the restructuring stories, Ukraine has been one of my favorite trades for some time. The restructuring has turned out to be more market friendly than what markets have expected, and in some of the stories where there is a strong IMF backing and still positive momentum in terms of reform. So that would be the likes of Egypt, Argentina, and Ecuador.
Okay, Trang Nguyen, thank you very much indeed. BNP Paribas Global Head of EM Credit Strategy on the opportunities, of course, in an environment where the Fed could be cutting and political risk could be rising stateside. There's plenty more coming up. This is Bloomberg. Welcome back. Well, brace yourselves for more volatility. And here's a gauge in terms of what volatility's been doing and the inversion that you're seeing. So at the front end, in terms of pricing of options around volatility, you're seeing more pronounced moves in terms of a bigger spike of volatility at the near end than you are at the back end. So the inversion is there. Interestingly, what that suggests, the last 4 times this has happened, it doesn't happen very often, the last 4 times this has happened, has actually suggested the S&P is nearing a bottom. Let's see, as of course S&P E-minis point lower again today after the sell-off of last week. The other space that's getting crushed once again today, and you can see that in terms of Bitcoin and Ether. Let's flip the board and look at crypto, because you remember, you're at 74,000. That was a record high, around 74,000. We are now, the last time I checked, around 52,000, 53,000 for Bitcoin. And that pressure, again, around the cryptocurrency space remains pronounced. You've seen an outflow in terms of those ETFs in the US, Bitcoin ETFs, the most in about 3 months. This is the biggest drop since we've seen in terms of the implosion, since the implosion of FTX. The question is there further to go, or is this a buying opportunity for those who want to get exposure to crypto? Let's flip the board again, because the other negative factor for these markets is what Berkshire Hathaway is doing. Warren Buffett cutting that stake then in Apple by almost 50%. That's after cutting its stake in Bank of America last week by close to 9%. It's got a cash pile now, Berkshire Hathaway, of almost $280 billion US dollars. The question is, how do they deploy that? We know they have struggled. Let's get back to the market story then, because the superlatives again coming thick and fast. The pressure and the sell-off, the pronounced sell-off. This is a meltdown in Asian markets right now. The Kospi down almost 11%. The banking sector being crushed in Japan. The MSCI Asia Pacific wiping out all of its gains of the year. The Nikkei at 31,000, falling almost 13%. Again, Japanese banks really facing the pressure in the session today. S&P E-minis pointing lower by almost 3%. The Nasdaq 100 looking at losses of 5.5%. It was already in correction territory before the start of the trading session, having lost 10% prior to today. Further losses expected then at 17,512. Later today, 9:30 a.m. UK time, we're going to be speaking exclusively with the CEO of Novo Holdings, which manages the investments and assets for Europe's most valuable company, Novo Nordisk, reporting earnings later, of course, that interview later today. The opening trade will be walking you through a wild day for these markets. That's up next. This is Bloomberg.